All right, so meeting is now being recorded. Thank you very much. Assalamu alaikum and Bismillahir Rahmanir Rahim. So the today's presentation is about it will be in different sections. The first section will deal with the software, my Excel-based software, because many of you are my customers and they have this software, but I understand that not everyone is proficient in Excel and not very much, I mean, it's not very handy. I understand there are people who are probably struggling with the software. So I will explain the features in the software and how to use it. And afterwards, we will jump into the main topic of the day, which is going to be how we analyze the stocks. What is the strategy? How do we analyze the markets and the stocks? We select it. And probably all of you know that software is one part, but another part of my service is that we offer, for the time being, it's free, a free weekly commentary and stock picks, and also through our social media network and WhatsApp group, threads, and Facebook pages. We interact with people who ask questions and their answer to their queries, and then analyze and tell them what, in our opinion, is best to do, what not. And people keep on definitely, they have questions, and everyone's money is at stake, so people are concerned about it. So are we. So let's start with this. Our, if you uh, first, let's me read out the disclaimer. The material presented here is for educational and learning purposes only and should not be taken as purchase or sell recommendations. Trading, investing in stocks and derivatives, especially options and futures, is risky and could result in a substantial loss of invested capital and money. So please make sure that you should only invest or trade that money which you can afford to lose. I'm not a registered financial advisor with FINRA or SEC, and for any personal financial advice, please consult a registered financial advisor who can evaluate your personal goals, your personal financial situation, income, other things, and then accordingly can prepare a portfolio and advise you how to distribute your resources. Coming back to the software itself, my software is, I hope everyone can see the Excel screen. If someone can write in the chat window that you can screen confirm it. Yeah, thank you very much. So when you start a software, you come to this main first worksheet, which is user interface. Here in the green cell, you can type any ticker symbol and the software will update it. The software not only update it, but provides you with different technical parameters, some fundamentals, charting tools. On your right, you can see performance. So you can evaluate 5 days, 15 days, 1 month, 3 months, 6 months, 1 year, 3 years comparison of its price increase or decrease, and also its relative performance against the benchmark index, which is S&P 500, and the respective S&P sector. In this case, this is a Centrus Energy Corporation, and its industry is uranium, which is material. So that's why the sector is material, XLB. So while the XLB is down, we can see in 15 days is 1.43%, 1 year is 4, but this particular stock is up 610%. Right here, where my cursor is, column B. So this is interesting. Why it is happening, we need to know that. And we need to evaluate so that we do not miss out on good opportunities. But most of the time when the ticker symbol, when it rises like this, most of the time, according to our methodology, it's extended. We do not advise that something is up 600%. So we can say, okay, in the next 1 year, it's again going to be 610% up. That's no joke. And normally it does not happen. This is quite unusual. So, but anyway, coming back to the software, here we have this screen. We have this latest value. The data is coming through Microsoft Excel. It's 5 minutes delayed. Today is Sunday, so this data is as of close of Friday. It was 12.12% up on the Friday. We can quickly, if we have a list of stocks here, we can select any of these. For example, CDNS. If I select CDNS, the software is going to download the data and update all the charts associated with this particular program, which is on this screen, like the center. You see this particular chart, and we have our main indicator is known as TR chart, which is our proprietary indicator. And that TR chart is here, right here on this sheet. And this particular, like, remember we changed it to CDNS right here. XNS means it's a Nasdaq stock. We can change now we are on, have move on to the other TR chart, and we can change the time frame to see a better look. Let's say I want to see the last 1 year of the CDNS. And it is telling me is identifying different buy points. We have a system that identify the buy points, and it's not only identify you the buy point, it also gives you suggested stop loss. And our methodology is that only buy when the market is in your favor, the sector is in your favor. Like in this particular area, when this is red or orange, that means the market is in a correction mode. This particular stock, similarly, the market will be in the similar mode. And when it's in a light green, it means it has given a buy, it is in a buy zone. And this, when it's strong, which means it has a strong momentum attached to its performance. And that's why normally when it moves to the strong green zone, it will make a huge jump. What we will look for, we want to see the software crossing this buy point, sorry, the stock crossing this buy point, which is a buy in volume and in this green zone. And this particular indicator has 3 different stages. First stage is this triangle, meaning the program is sensing that a new uptrend is being started. Does not mean it's going to hold. Let's see. The first stage, normally it fails quite frequently. And then, but if it cross a buy point in a green zone, then we have a strong case that we should look and explore it in details, that why it is moving and what are its chances. Is it a late stage advance, or it's an early stage advance? That's an advanced concept. We'll come to that. When the stock goes through deep correction like this area, and when it advances, then we have higher chances. Why? Because it is coming out of making a fresh new stage. This is the first stage. This is going to be the second stage. This is the third stage, and this might be the fourth stage. As the number of stages increases, the chances or the chances of a larger move also decreases. So if you want to buy stocks at as early as possible in first stages rather than in late stages. Going back to the user interface sheet, I don't want to spend too much time here. It gives you a total market summary, what NASDAQ was doing, what Dow Jones was doing, what VIX is doing, gold was up on that particular day for 1%, oil. And then if you want to do further research, then we can go to the free resources like Yahoo, Finviz, Investing, Zacks, and Market Watch, and it will take you that particular service, whether paid or unpaid. If you are a paid member, it will go take you to that website, and then you can explore the fundamentals and the sticker symbol in details. One question was that, do you have a WhatsApp group? Yes, we do, and the links will be provided you later on. Now coming back here, we have different technical indicators, and this is the stage of its neutral buy. So that particular stock is still in a neutral buy zone. For the day traders, we have different support and resistance levels provided here as well. And we have a daily guide as well here, right here. For the CDNS, it is telling you different levels based on these day trading signals. So overall, the TR indicator is not designed for the day trading, but there are many people who just want to have a day trade, who want to have some support and resistance levels for each particular day. And here it provides you for that particular ticker symbol, which was CDNS in this case, and the different symbols. Right now, the last price was right here. So these are the resistance levels and these are the support levels. We can analyze a stock in details, as well as we can take a look at its seasonality charts. For example, this is a 10-year seasonality chart of the same stock, CDNS, and it is telling us that September in general, like for 10 years, for 5 years, for last 3 years, whatever period we want to select, is a negative month. It's always an average return is 1.84, but going forward, 2.24 and 5.72 return respectively for the next 2 months. November, for example, is a very good month traditionally for this particular stock. 10 out of 10 means last 10 years, every year it was up, and average return was 5.72%. So maybe if you are a conservative person, a conservative investor, you could put this thing in your radar, your watch list, and then look for an entry for example, this TR indicator here is slowly changing. It might start another green zone going forward in November. So that's how the software can guide you. It prepare you the daily guide, prepare the seasonality chart as well, which is very useful. It also provide you different indicators like volume, average volume, is RSI, is a momentum indicator. PPU is a very useful indicator that I use all the time. It's a slightly modified version of uh, very popular to MACD indicator. And a secondary indicator, which I also always look before taking position, which is known as accumulation distribution. And it is telling you that the Wall Street or the professional and the institution, generally they are accumulating share of it for last how many months a year? 5 years. So this is a 5-year chart. As you can see, Wall Street has always been more like a accumulation mode, especially currently the AD line is known as AD line is at the highest level here. And also its relative performance against SPY, which is the ETF for S&P 500, which is not that bad. If it is started from 0.295 years ago, it's still 0.55. So it has beaten the S&P almost like 70% and has given a higher return than S&P. So that gives you a kind of a sense that, okay, it's performing better than the overall index. Wall Street is accumulating it. It is in our momentum zone, strong green zone, above a buy point. Now our suggestion is do not buy a stock if it is 5% above or 5% below that particular buy level. So that's how this software works. There are videos available which describe the software in details on my channel, as well as I'm also available separately. If you have any question, you can always ask me. It does not stop here. We can also have different multiple watch lists here, as many lists as we want, in as many different worksheet which we want. So, for example, this particular week, let's go to the end. This is 9/19. So I was considering these stocks. So I evaluated each of these according to my strategy in very details, including the CDNS, Lazard, STEP, NU, SHAC, Scandesk. Previously, there's another list which I used on the September 12, and that's how I maintain. Now, instead of analyzing one stock at a time, you can have a list of a stock, just like this 5, 6, or 7, 8. These are 8. And then you can press this button, get table information. You can select different fields like what was this price, last price, volume, 5 days performance, 15 days performance, 1 month performance, 5 years performance. You can have a very small mini chart of performance, which is telling you, okay, over last 5 years, or I think this is 6 months, sorry, the 5 years, how it really performed. And then you can have an idea. For example, this particular stock, what is this? And RXRX, Recursion Pharmaceutical. Look at its performance. 5-year performance is minus 85%. And the chart gives you in a glimpse, okay, this is how it looks like. So we should avoid this thing, right? Instead of going to a loser, why we have so much of merchandise available? So why not look for better options? And we can select through, if we go, this is stock analysis menu here. We can go to the settings. And we can select fields here through the main menu or here, and we can select different field. Like these are the fields in this particular table. We can add or delete different field and different technical indicators, and it will prepare the table accordingly when you press this button. Value in the D38 user interface. Let's go. There is a question on D38. What is that? D38 here. Okay. You see this accumulation distribution line? According to a formula, it's calculating this accumulation distribution line right here. That is this value. Forget about this absolute value. It basically is calculation of how many shares were accumulated over a period of time. It really doesn't make sense, but just by taking a look at this graph, we know, okay, this accumulating share is going up or going down. Buy on sell signals on my TR chart. If you are not able to see the chart, then go here on the TR chart worksheet directly, type in the symbol here, and then press update by zone. For example, you want to see this chart, let's say for NASDAQ, QQQ. Okay. Unfortunately, because in Excel, sometime they are it can get confused because there could be more than one stock traded with this symbol in different exchanges around the world. So okay, I think KQQ is traded not in it's NASDAQ, sorry, not in the ARCX exchange. Now it's loading up and calculating the data, and then and this is how when you press this update by zone, it has come up with these buy zones for QQQ based on the daily chart for last 1 year. And not only this, if you just scroll below this Skinner right here, it tells you, it prepares a table of all those buy points which are shown graphically up there, along with their on the date. So last buy points on NASDAQ on the daily chart was made on 4th of September at this price, 575. Y point was 577 and stop loss seriously 559. So let's see how it performed right here, this one. So from 575, it went onward to something close to 600, 599.35. Not bad in this. Excel sheet, this is a software. You have to buy it from my website because it's a lot of efforts. This has been years of work which has gone through. It's not one sheet, it's a complete package. And the day trading, it question about dating, how it's calculated. We can select, we go to the settings and the day trading daily guide. So these are the levels you can select. Okay, I want Fibonacci levels right here. I want pivot points. I want daily levels from the moving averages, like 20 days, it says 9, 20, and 50 days, and standard deviation, relative strength. Those are, and all those since it has been selected, so it has come up with these levels and it calculates it on the basis of last price for today's date. There's no monthly cost, it's only one-time cost, and you get 1 year free update with the software. So coming back to this thing, we can evaluate this particular table, and as many list could be very long, like, but because every time he has to go through the Excel, download this data. So we generally maintain watch list of maybe around 10, 15 stocks only to save time on our side. So that's how the software works. Is not only this, is also a very good feature is relative strength. A lot of people ask that, oh, okay, is it a good time to buy this? Is it a bad time to buy this? For example, let's check the relative. This particular indicator can help you. I think it was APP. I think I have to give the NASDAQ or NYS. Okay, it found it. Applovin, one of my favorite stocks in my list. Now it goes back for the weekly, and it plots the RSI indicator here, and it checks that what is the level at which normally the stock becomes overbought or oversold. So every time when you see when it comes here and it tries to go back, it plots a dot here, a diamond, green diamond. That is saying it's trying to move up. And finally, when it moved up, it gives you a quite a bit of rise here. But similarly on the this side, every time when it goes above this level, it comes down like this point, this point, this point, this point. Now, do not get hung up to this particular stock. This is one of the tool we use. So, for example, if someone asks, okay, what about APP at this time? APP is already its all-time highs above this. Does not mean that it cannot go here, but it's bound to pull back. Sooner or later, it will come back. In other words, if I plot the APP chart here, the TR chart, and that was a weekly chart, so I would like to take a 3 years weekly view at the APP. And let's see where APP, you see how much extended it is? And remember, it is still in the green zone. That's why it says strong buy. But it's way above this particular buy point. This is what we are saying, looking at this chart here, that it is at a higher side. Does not mean that it cannot go further higher, but it is likely that at any particular resistance level, at any time in the very soon, it will have a pullback. And in this particular zone, case, when it is, you see, it has given us, sorry, the stock name is taken global compliance application because there are two stocks with this symbol. So we have to be more particular about the full name of the stock, which is in this case, it's a NASDAQ stock. So that's XNAS.app, Aplovin. Almost the similar kind of chart. It's still in the green zone, but way above from the buy point. So we do not want to buy it. Now just assume that you were here the past last year, Jan, and you buy it right here when it's the buy point, the green zone. It gave you the value was here 43, and it came when and it does not go through this lower stop loss. And then you could have look at the rise it has in 1 year, starting January and closing something. And when finally it comes out of this thing, this is a sell signal. You sell it something around 369. It was 43, and within a 1 year period, 369. When it touched back and goes to this uh, particular EMA line. So how much is the rise in Aplovin? It's more than I think 400 or 500% from here to here. Same is the case here. So you need to understand and check, okay, what is the behavior of this particular stock, how it really performs. Because most stocks, when they are growth stock, they perform like this, but not every stock performs like this. So there are value stocks and there are stocks which are weak. For example, Accenture. Accenture is the stock which is going to announce its earning pretty soon. ACN, not CN, ACN. Let's see, press update. And we're just taking a look at STR zone. This is Accenture. As you can see, it's in a strong sell zone. It's way below the last buy point. Even when it was here, we should have waited for the green zone to appear above a buy point or within 5% of the buy point. So should we go ahead and buy Accenture before it's earning? Obviously not. Can it rise? Of course it can rise. Everything is possible. It can have a very good surprise for the market. But this thing is telling me that while the market is in a bullish trend, Accenture is losing. And Accenture is not a stock to go for. It's well below its key moving averages, which is in my case is 30 EMA here. It's weekly, it's 200 days of 30 EMA, and it's well below it. It's declining. Every time when it goes there, it finds overhead supply, it finds resistance and comes down. Now, if I go back here and do the same thing here, Accenture, take a look at its other parameters, ACN, and update it. So it will do everything. TR chart, this chart, seasonality chart, everything, and all these parameters. That's just taking a while. Okay, does not have a chart for, again, it went for the CAN. For some reason, it's taking CAN, or maybe my mistake. So the CAN does not have a data for, let's try ACN. CN does not have a data for 10 years. So that the combination of your system, your moving averages, a buy zone, TR chart, seasonality, then it can filter out a lot of noise. You see the performance of ACN for last 3 years, it has given you 12 minus 12.83, year to date minus 31. This is exactly what is being shown here. Take a look at this chart again, ACN. What should be its AD line? For the from 23 to 25, this AD line, even then, there are people who are buying it. But its relative strength is going down and down compared to our standard benchmark. So it's a much weaker stock when we compare it to the broader index. So we are not going to be interested in this particular stock at this time, especially when the earnings are around. You want to take a relative strength, you can take a look at that. In addition to that, there are other features also available in this software. I don't want to go into much detail of the software. If you have any question, you can ask me separately. This is a heat map. So for example, the heat map has been updated for September 19. Or sorry, we have to press this update and then it updated. So this is a heat map for XLK, tech sector. So the tech sector heat map looks like this. NVIDIA was 0.24% up, Apple was 3.2% up, Microsoft was this percent up. We can take a look at a particular sector or a particular index, overall index, and that gives an idea of which sector or which stock was hot and which stock was not. For example, TXN was minus 1.24. That's why it's shown as red. We can also have a portfolio where we can track of our portfolio. We can have transactions and enter new transactions like buy and sell, and accordingly it will update it can track and tell us, okay, this is going to be our stock portfolio, and it takes two currencies for that, US dollar and Canadian dollar. So this particular software was basically made for people who have Microsoft Office, Excel 365, and they use Excel every day. But our service goes beyond this. This is one part of it. And then we have weekly stock commentary and stock picks as well. So going back to our presentation, so this was a sheet from the software as you saw it. Now we come to the second part of it. How do we select the software? How do we analyze stocks? I keep saying software. My apology for that mistake. We have different screens, and I do not use just this particular piece of software. I am subscribed to a number of services like Barron's, Investor Business Daily, Wall Street, Market Watch, Bar Chart, Stock Chart, and I use other charting platform as well. And then we have different screens in those charting and stock screening platforms. We have strong earnings list, accumulation distribution list, which I just explained, bullish PPO screen, and bar chart screen. I will show you one or two so that you will have a better idea. Through those filters, we have a list of stock which we analyze every week. Then we see their relative strength versus peers and industry, recent performance, their, as I explained, TR indicator. Then we take a look at their fundamentals. Now, normally we want to have stocks which have strong fundamentals. We just do not want to move the chart, follow the chart movement, and pick the stocks on the candle movement. That's not the way we should work. We should have a longer term vision, at least for the swing trading, maybe 15 days or 30 days, and beyond that for long term trading, maybe months and years. I have stocks in my portfolio which I have for years, for example. NVIDIA is one of those, for example. And then we also take a look at the institutional buying, that are these purchases or the stocks being supported by big institutions, fund managers, banks, etc.? What is their seasonality behind the movement, as I explained in the software, and fundamentals? I will take one example and we'll go through all these, the entire decision flow. And then we have some secondary filters. Secondary filters are like our ethical and moral standards. Like majority of people are my customers are Muslim, so they have to follow certain principles. For example, no interest. For example, uh, no insurance company. Other things. I just give you an example. Like I have taken Oracle off of my list for good. Whether it increases by 30%, 20% really doesn't matter because it does not pass through my secondary filters. I'm talking about Oracle. And some people are shocked by this decision, but that's how our secondary filters work. And then we come up with the final list. Going beyond this, this is the performance of, you would definitely be interested in how does this system, how has it been performing? So this is how our stock picks through our weekly commentary and weekly stock pick list, they are performing. Since April, in April when the market was in correction mode, we closed all position except for gold and gold ETF. Since then, since April, a total 56 selections were made through the weekly stock picks or through the social media as well in between. And out of those, successful were 41, giving us a 73% chance of success. Successfully means which has given us some kind of positive return, which is not a bad ratio. Now, our strategy is that we cut down very strongly on the losing side of our list. And we are very particular and stringent about that, 8 to 10%. We just do not allow any position to go below 8 to 10% our purchase price, 95, 99% of time. Only exception are those that if we know for sure we have very strong conviction in the fundamental of a stock, like Nvidia, Apple, and some Max 7 and others, and we know the history and performance of the stock is that for some reason it has been pulled back, is weak, and it does not contribute a big chunk of our total portfolio, total investment. So then we can allow it to maybe 10, 15, or 20%. And some cases, like IPOs and the volatile stock, like APP is a volatile stock, we had to give a bigger room. IONQ is the one there. Now look at the performance. CRDO, let me show you this worksheet. One second. This is the same chart here. And this table tells us which positions have been closed, what is the performance right now. Look at some of those. CRDO had given us, position was open at 13th of June, and it has given 130% return, this bar here. Broadcom position was taken at 20th June. Since then, it has 38% increase. Aplovin, which we were discussing, just last month, 1st of August, 71% up. Micron, 15th of August, 35% up. On the other hand, you look at the losses. Ethereum, since Bitcoin and cryptos are more volatile in nature, that's why we give a much larger room. 8.4%. We have not closed this thing. We'll probably give it to 10, 15%. But all others we should close and which gave us loss. HESM, I did not want to close it because it's a very high dividend yield player, but I suspect I just closed it yesterday, 19th of September, because we are looking at it and in our opinion, it will go further down. There's no point in having an 8% loss now going to 10 or 15% in this particular stock. So that's how we do. Our maximum stop loss is 8%. Most of them will be below this. Sometimes you can find that minus 9.68 minus because there's slippage and you don't close it on time. The rule of thumb is based on original investment value, but sometimes DC also works. A stock like Broadcom and Nvidia, as I said, you can give a bigger room if you have strong conviction in the history of the stock and the fundamental story of the stock. You know the product, you know the company, you know its history. We take a look at that. Come back to this. Trailing, trailing stop. That's a good question. I'll come back to it. Now take a look here. So from that weekly commentary, recently A-Lab was also but A-Lab is not in our weekly stock pick, but it was part of our social media selection. It was mentioned in our WhatsApp group. Baba was taken very at the right time, and it has given us something around 30% return on that. GDX, gold miners have given us a very good return. Nvidia was picked just right time, around 100, 112 at that time, and it has given us 100, I think. It has given us 84% time return since selection since April. So this is hypothetical because not every person will work like this, not every person will follow this, but it can give you a very good kind of a base where you can select a stock, you can follow the strategy, follow our recommendation. Obviously, it's your money, your decision. Everyone is different, everyone acts differently at different time, and then you can manage your portfolio accordingly. So I hope you probably like this thing, but remember the market is in a bullish mode, secular bull market, and it's easy to make money during secular bull market. Real challenge come when market is not a secular bull market, but market is become bearish in a correction mode. So going back here, for example, market. When we were here, this is year 21 and this is year 22. That was a real challenging time because no matter what you do, if the market is below its key moving averages, you will find some good opportunities here and there. But the good stocks and the kind of stock that we look into it is strong fundamental. They move the market like Broadcom, Nvidia, Tesla. And when the market is behaving like this, means the good stocks are behaving like that as well. So that's the real challenge when you have to cut down on your position, you have to cut down your exposure, and maybe park your cash. And remember, cash is a position, and then wait for these things to appear. Now, just take a look at performance of that particular indicator, TR indicator, on this S&P 500 index itself. So you see, whenever this is a strong green zone, it buys this. That's a buy signal for you. You can buy, but when you see struggling and coming back, you immediately get out. Never go below this stop loss level. And then, for example, the green signal appears here and it crosses the buy point. This is the buy point here. You buy here within the 5% range. And take a look, if you buy here, and this was your stop loss. Just from here to here, it was around 15%, 10, 15%. It took another dive, but since then it never looked back, except for this time earlier this year. And every time if you buy it here, buy point with the green zone, strong green zone, buy point is a strong green zone right here, you have a good run. So if you are fed up with the individual stocks, the volatility and other, you can have some good ETFs, market ETFs like SPY, SPUS or QQQ. And then you can just look into this indicator and take a position at the right time and then forget about it. Because patience is the key, and the market is in a secular bull market mode, not this mode, not in this kind of zone. The market hopefully will give you good returns. And then you should also understand when is the time to get out of the market. And this is where our interaction and our stock weekly commentary can help you in taking those decisions. Now, how does the what are the key points, and how we will go through one stock and evaluate it through our strategy. So we look for the stock with strong fundamentals, solid products, wide moats, and strong earnings. If the stock is not providing you strong earnings, then sooner or later it will start giving its gains back. As I said earlier, we buy within 5% of buy points. TR indicator or a strong support during pullbacks. Now, TR indicator is for the growth stock when the stocks are moving up. The same growth stock, sometimes they give you very good entry when they pull back and they test their moving averages or strong support zone. We'll also take a look at one of those examples. We always prefer a stock with strong accumulation, seasonal tailwinds, and high momentum. That increases the chances of our success. And this is what we are doing. When we lose small, 8 to 10%. But when we gain much higher, 15, 30, 40, 50, 100%, or even more. And that makes up for those losses as well. The losses are given as part of the game. They will always come to you. There's no holy grail kind of thing, no holy grail indicator, no holy grail secret strategy that can be profitable all the time 100%. Right? It's not possible. If someone tells you, then he or she is lying to you. That's my experience. No offense to anyone. Take some profits. We limit our losses to 8 to 10%, and we respect sell signals. There's whole science behind sell signal. What kind of sell signals are there? If it is strong volume, it breaches a support zone, it breaches a key moving average, then it's time to get out or reduce your position. Take some profits when reach 15-20%, let the test run. For example, take a look at this S&P again. Here, it breaches this key zone, green zone is gone, and it drifts below this line. Chances are there that it will further go down just like it did. And by the time it will come, you probably will have lost at least 20-30% of your investment in this particular stock. So it's time to get out. Or maybe it's too extended. Then your RSI and other indicators telling us that a pullback is due anytime. That's time to get out. And you have decent gains in your pocket. It's time to capitalize on those gains. We were here, right? So take some profits when reach 15-20% and let that rest run. There was a question on trailing stop. So this is the trailing stop kind of thing. When your profit level reaches 15-20%, it's time to at least book some profit. Take some money off the table because nobody goes broke while making profits. Reduce your position size and look for another buy point for a higher stage. And then you, at that time, if you have a 10-15% of profit, bring your stop loss up. Do not allow a stock, if you already have 10-15% of profit in it, then go back and give you a negative loss. No, because you have to work on your psychology and emotions as well. And it hurts you. One is your mental capital, another one is your financial capital. Financial is one thing, but it hurts your mental capital as well. It's depleted as well. So do not allow a stock with 10-15% of profit cushion to give you a net loss. And adopt sound risk management and position sizing principles. Now, that's in itself is a complete different subject. You should not have too many stocks in your portfolio, not any stock which more than 5, 7, or 10% than of your total investment. Because if one stock goes back, you have 25% of your investment in one stock, and that goes back 25%, then probably it will take a heavy toll. It won't, either your account will blow up, or it will take a long time to come back. Take some profit means it's up to you. Everyone is different. I like to take at least one third of my positions off when I take some profit, and let the rest of the two-third run. Some people are more comfortable with 50%. Some are just with 25%. But I go for one third of the position. And I'm talking about this particular point. There was a question on how much should be what's the size of the position. So let's evaluate Applovin. So I think we have this up here, Accenture. So let's go back to Applovin. It was, I think there's more than one APP. One was Applovin, one was for global something, unknown stock. So let's see which one it comes up with. This is not that Aploven probably. This is Aploven, okay, but does not have 10 years of data. So that's why it gives to tell you the 10 years seasonal chart cannot be plotted right here. You probably have to go back to 3 years or 5 years to take a look. This is 3 years. Now it's plotting this thing. So Aploven is strange. In last 5 years, December has been a very good month, giving a net 28.52%. But you have to go into now we are analyzing this Aploven. And it is up 4.52%. It's now 650 already. Okay. The performance here is that in 1 year is already 423%. And in 5 years, 3 years, 2,746%. Something going on here. What does it do? It tells us that this is a marketing platform. It provides software. It's a software company. It provides end-to-end software and artificial intelligence, AI. So you can bet this is something has to do with the AI. Solutions for business to reach, monetize global audiences. And it has advertising solutions and comprehensive. Now, fundamental side is PE ratio is 90, which is quite high. It's $219 billion company. Technical side is still a strong buy. Most technical, but some things are, RSI is telling us this is overbought because of this rise. And other William percentage R and CCI commodity channel index, it's also telling us that this is overbought. So that's why 77% buy technical indicators. So we have to evaluate what is it a good time and when to go long in this particular stock, or maybe it's not a good time. We don't know. Going back here, in the TR chart is again for some reason I think it is a and select this Aploven 1 year and see what it says. I'm pretty sure it's going to be strong buy or neutral buy at least because the performance has shown it is strong buy, but it's way above this buy point. So the buy point was here 463. Aploven is right here. How much? 649. Already I think 50% or 45% up from that particular. Our suggestion is do not go beyond if more than 5% up or 5% below this particular point while having your stop loss right here within 8 to 10%. So this is definitely not the point to go and take a fresh position in Aploven. When was the right time? When it was here, the buy point. When was it? Right here, 22nd of August. Correct? And that's why here, Aploven, we made a position in Aploven into a previous buy point. There was another buy point, must be another buy point, which was something in between. And we take a position here at the right time. And from that, at that night, it was 379. From that, this is just last month, 1st of August, 71% up. So we made a decision, correct decision at that time. So let's take out some a deep dive into the Aploven. So what was Aploven doing during? I don't remember exactly what was it doing. So this is stocks chart. Yeah, NXNS is Nasdaq. So this was it. This is a weekly chart. I have to move to the daily chart. 1st of August was right here. So at that time, it was at this right here, 1st of August, right here, 369. It was at these moving averages, and those moving averages 20 and 50 days are very close. So it was giving us a good, based on its performance, it was already in a buy zone, close to the buy zone. It was giving us a very good chance with the minimum stop loss, 8% should have been here. So it was the stop loss probably what 343, maybe 4 or 5% only. A very good chance so that we could eye previous highs, and it really did that. Not only it did that, then it pulled back again. See exactly where it found the support. It's 50 days moving average right here. So that's what I was talking about pullback. So this was your second entry, not according to TR indicator because it has a strong pullback. But you are saying, okay, is there anything wrong with the fundamentals of this company? You have to look into that. No, then find another with the minimum stop loss again, right here and previous low here, and then it gives you a very good run again. But right now, as we saw there, is RSI is right 86, is due for a pullback anytime. Can it go higher? Obviously, it can go higher. It can remain overbought, and it is doing it on very high volume. So there's a lot of strength behind it. Not only this, we always take a look relative to its industry group. So Aplovin is part of software group. It's a software company. You see, Aplovin is continuously going up and up compared to its peers in the same group. The software group is a big group. There will be other companies like Microsoft, and all software companies should be here. But compared to them, within last 1 year, this is 1 year chart, in fact, less than 1 year. See the relative performance against is right here, almost vertical to the edge of the chart. Same is its performance with S&P 500. So at that time, right here at this point and this point, we also take a look here. Okay, how does Aplovin is performing compared to S&P and its peers? And it was doing at right that time it was here. It was doing very well again. So it was not weak in its industry. And we also take a look at how the industry group itself is performing against the S&P. It's not doing very great, but it's at par. It's kind of so-so. So it's not really bad as well. And the sector is tech sector, and the tech sector, as you know, is on fire. It's really going high. It's an aggressive sector. It means the things are in our favor. But not just this, we also take a look at its AD line. See how this AD line is increasing? People are accumulating it. Wall Street is accumulating it. And the CMF is telling you how much net cash is going into it. Chicken money flow. A lot of cash is going into it. People are taking positions. So why not take an advantage? So it was a bit of risky. We not only do this, we through others, we go other platform, other tools, we take a look at their indicators and see how they are advising against it or advising in favor of it. For example, here we want to go further into the depth of fundamentals. Okay, Aplovin right here. This is IBD. IBD is saying that its EPS rating is 81. Now, is what it means that its earning per share for last quarter was up 153%. Now, this information unfortunately is not available as of now in Excel. So that's why I have to go beyond Excel and find other things as well. So look into the more depth of it. And take a look at here in the last 3 quarters, average earning per share growth was 185. So this particular company is growing on average every quarter it's earning 185%. That's why its EPS rating has come up. Is it profitable or not profitable? It is still profitable, 136% annual rate of return. But it has a debt equity ratio quite high. So from strictly platform like Zoya or Musafa, probably they will disqualify it on this particular factor only. Apart from that, we also take a look here. What about up down volume? What about institution? Now see the changes in funds owning stock is 6% in last quarter. And for last 8 quarters, it means for last 2 years, funds ownership is on rise. More and more mutual funds, ETFs, fund manager, they are investing in it. And the percentage change in funds is 6% over last quarter. And its up down volume is 2.9. It means on the day when it's high, the volume is 2.9 times on average the volume of the days when it goes down. So when it goes high in volumes. If this factor is above than 1. And when it goes down, it goes below and goes down in less volumes. So people are accumulating it. Is how much is the tax margin? Earning is here, EPS, earning per share. 153%, right here. Last 3%, earnings rising 185%. And that's return on equity. But if you do not have positive earning, you will not have positive return on equity. You will have negative return on equity if you are reporting loss. And not only this, is sales is also increasing. Sales in one quarter has increased by 77%. So all the things, the fundamental earning, the revenue, top line, and the bottom line, rate of return on equity, the accumulation, funds were pouring money in this thing, funds are investing in it. They were all in one, aligning with each other. That's why we said, okay, fine. It has come down, but this is a very good time because it's likely to find support here. Why not go ahead and do that? And we took a chance and it worked. But what if the same, some other company like Accenture? Let's take a look at Accenture because I took an example of a good company, an Accenture. What Accenture is doing is in the same software group, DJUSSW. Look at Accenture's relative performance versus its peers down here, 1 year. Remember, APP was like that. And look against the broader index down here. So it's underperforming its peers, underperforming its group, underperforming the broader index. While the group itself is not doing that bad, yes, it's a group. So why should I invest in Accenture at this point? And why should I now invest in APP? Correct? Because more and more funds and banks and fund managers are also looking for that. Now, again, let's go and I was looking at this screener, right? Add Accenture here and see what the fund managers and other things are doing here. Okay, let's add thing. Just to explain this thing. This is IBD 50. No, so I cannot add one. ACN, Accenture. Okay, you see is a composite on EPS rating is all relative strength just 8 compared with relative strength of APP that was very high. Compare here. Funds are taking out of this money minus 3%. Quarter for increasing fund ownership 0. It was 8 for APP. Accumulation distribution rating E. It was A for APP. Up down volume 0.6 for 2.9 for APP. So when it is up on less volume. And when it is down on high volume. So what people are doing? Distributing it. They're not accumulating it. People means big funds, big guys on Wall Street. So what should we do? We also should also avoid it. Forget about its earning. There may be an earning surprise, fine. But our money is more valuable, our funds. Is earning per share, now we're talking, look into the earnings and the fundamentals. Is earning per share is red, 12%. And last quarter earnings surprise was 4.3%. So it can give you some surprise. But sales was 8% last quarter. It's not much. What was the sale percentage high of APP? Something around 153, if I remember. Or maybe more. 153 was EPS change. So that's the difference between a weak stock and a strong stock. And a strong stock could be extended and overextended, just in the case of APP. So it does not mean that this is the right time to get into this stock. What it means, to go back to this watch list, excuse me, and make a watch list for APP and look for a proper buy point next time. When something shows up on our screen and it gives us a buy point, that should be the time we go into the depth according to our strategy that I explained. Evaluate from different angles, from the funds, from the relative strength, from the earning, from the fundamental, from the company business, its competition. And then we decide, okay, it's time to take some chance or not. And another feature of this software is that you can have a list of stock, a table here, and then you can run it screener, and it will provide you a table of all the stocks with their current TR indicator status. Like I can see the NVIDIA is still a strong buy. and it's in a green zone. You want to see whether we should go for it or not, that's another matter. It could be extended, it could be consolidating, but it is still in a green strong zone, which means a lot of investors are still looking for it. And whenever the Nvidia comes down, they start giving it support. Com Compared to this particular stock in this particular when it was under distribution. So that's how the strategy works. It's a whole concept behind it, whole strategy, whole a system of selling, loss control, sound risk management, buying within 5% of buy, and thus that's how we have been able to produce these results. Nevertheless, there are always losers, like 7% still loses, but we cut down loses within our maximum stop loss levels. Sometimes we go beyond that, and for the good stock like Broadcom and Nvidia, we have a higher room. For if we go for some volatile stock, then obviously we have a higher room. If we go for value like HESM or MPLS for because of their high dividend, we have to have a kind of a balance as well. We just cannot follow all the growth stocks, especially when the market will come into its correction stage. So we need to have that kind of a strategy as well. The indicator legend here, we have different legend like strong buy. Neutral buy means we are neutral. It's in a buy zone, but we are neutral. We're still not sure whether there is strong momentum in it or not. Then we see strong buy. If you have this arrow means that it has just started in the last period. For example, if it is a weekly chart, the strong buy zone has just started in the current week. If it is a daily chart, the strong buy has just started in a today or the last working day. If there is a check mark here, then it has a last period and it is still within 5% of buy point. If it is a asterisk is also there, then it is started last period within 5% of buy point and a strong relative strength and or strong eddy. So this is what we should look for. An asterisk and this and this. This is how the legend works here. Now, do we have something in our screen? Very few of them. Like this one, PRCH, it has this thing on daily chart. Otherwise, I don't see any of those. Tigo, XLK itself, XLK itself is giving us some very strong signals. It's within a buy zone. XLK is the tech sector ETF. So by pressing one screener button, if I have a list of stocks, I can add the list here and then it will run through all those and give a status of all these, the TR indicator status of all these stocks in this list. And we have a back test as well. So we can, for example, I want to know, okay, I follow this particular strategy that simple, that whenever it crosses the buy zone, it's in 5%, I want to buy it, right? APP. And I want to do it for last maybe 3 years. And okay, let's try it daily. And I want to run a back test. Now what it's doing, going for the 3 years, applying this simple strategy, not comprehensive, going to the fundamentals, looking at all the aspect, that whenever there's a buy point, strong green zone, within 5%, it will buy it. And when they will cross the moving average, key moving average, or the stop loss sign, it will sell it. And here are the results for last 3 years. So 17th of May, it gave us the first signal. And let's say we invest only $1. So the $1 will become, according to this particular strategy, in this particular stock, 14.42, and the position is still open. And last time it gave signal on 2nd of May. And what it does at 15% or 20% return, it sells a portion of that particular position, 33%, as I said. And we can change that ratio. 33, you want to sell 33%, 50%, 25%, whatever. So it's still that according to those simple strategy in this particular stock, this $1 would have become $14.42 in 2.5 years in this one. So this is what the backtest feature does. It applies whatever I have discussed with you on this particular stock. Let's say that we want to run, and instead of daily chart, we want fewer entry, and we want to go and take a look at the daily weekly TR chart. Now this is the weekly TR chart, and I want to run a back test on the weekly. Back test is done on APP. So the $1 becomes $14.48. Still something around 1300% return in 2.5 years. Not bad. I would say it's great, not bad. It's great. So in this way, you can utilize the software to backtest your strategy as well, just not going forward. And if a backtest provides good results on one particular stock, then chances are that if it gives you a good buy point, then it will give you good return again in high chance. I would say that chances are high in this particular case in the coming future as well. So going back to the presentation, this was of a legend as explained. Stock picks. Stock picks is our weekly commentary and stock picks are published discussing market conditions, sector analysis, new stock picks, and existing ones which are already we have identified earlier on with actionable stocks and closing recommendations. And through the social media also we provide this. This is a chat WhatsApp link. And if you want to go and take a look at it, I have just uploaded it on my website. And let me. Okay, I just opened it. I hope you can see it. If you're not, let me know. So this is the weekly commentary I just posted, I think yesterday. It gives you an idea what is happening in the market, what is the market scorecard, what is happening in the each different sector highlights, and some important stocks movement in within that particular sector. Important economic event next year, next week, sorry. For example, next week we have some core PCE price index, which is the inflation index for Fed. New home sales on this particular day. Then some important earnings, which are left. Micron is an important earning. AutoZone, KB Home, Uranium Energy, excuse me, Costco. Then our long-term stock is now long-term or very long-term. And Apple, from the long term, we have identified that Apple is still in an actionable range. We alerted our customers during the week that Apple has created a golden cross. Now that was something on Monday or Tuesday, so that's why we did that. Alerted our readers and customers on our WhatsApp group and Facebook and thread pages. And these are the new picks for this particular week, upcoming week, which is CDNS is one of those, as I explained. MP is one. Not necessarily that we should go and buy, but it tells you at particular point, this is the buy point. If it crosses it, then we suggest that it's now in an actionable mode. And then whatever is in our open list from the previous stock commentaries and stock picks list. These are it's a long list. I'm trying to trim it. Reason being, there's going to be a slowdown in the market, if not maybe tomorrow, not next week, but then we have to close most of them immediately. But see, APP is here, IONQ, these are the winners. 8080, Micron, Fix, Stone, HIMS. I selected last week, and in 1 week it increased by 4.18%. Not bad. GEV is also allowing an entry. That's how we put that particular thing in bold. Actionable entry allows an entry within buy range, whatever. So this stock commentary is free for the time being. And but going forward, there will be a subscription charge, and I think it's going to be 9.99. Let me have the last slide here. But it will come free for my software customer for 1 year. So if you buy software, you will get the stock commentary for next 1 year. Otherwise, you just want to subscribe to the commentary. Right now, it's free. Anyone who is watching it, and please pass on the word to your friends, colleagues, family if they want to take a look at the commentary. Give us your feedback, how to improve it. And this is the WhatsApp and FaceApp and Threads and YouTube channel. I'm going to upload, as I said earlier, a recording of this session on my YouTube channel. And also during the week, if we pick any new stock or we find any good and interesting stock, we normally put those on this WhatsApp group, Facebook and Thread pages. So that's pretty much it from my side for today. Thank you very much. It's almost the time. It's the hour 3:12. If you have any more question, yes, at the $119 is one-time charge for the software with 1 year free updates, any updates that come to the software. And whenever it will go, the commentary go for subscription, but the software customer will get it for 1 year as well with no charge at all. I explained how according to our strategy, we analyze different stocks. One weak stock and one strong stock. Weak was ACN, Accenture, and the strong one was Aflavin. And I hope that you guys must have liked it. And any more questions? What software is required? Good question. You need a subscription of Microsoft Office 365. Because in only the subscription model, Microsoft gives you the data. And if you stock data. If you don't have a subscription of Microsoft Office 365, you cannot use Excel 365, then you cannot use stock data. Simple. Now, if you don't have Office 365, you don't want to buy the software, no problem. You can enjoy the weekly commentary stock page as long as it's free. The YouTube channel is here. I will definitely put the link here. Let me, okay. Let me open the weekly commentary again. All the links are there. It's on our website. You can download the weekly stock picks here and the commentary. And the last pages, you have all these links. This is the YouTube channel. I'm going to put this YouTube channel here, link. And we have an Etsy page as well at our Etsy store. This is our website, analyzestocks.net, very simple. This is a WhatsApp channel, link. And this is our, what else? The website itself, I'm typing the name of the address of the website. Any further question? If no, you are welcome to. Okay, I will take a look at the channel and the videos, why they are not in the order. I will take a look at that. Thanks for bringing it up. If there are no more questions, then it's time to call it a day. And thank you very much for your time and interest. And please give me your feedback. And I will try to make my recording available today by the end of the day. Okay. Thank you very much. Thank you, everyone. Goodbye.